Hello and welcome to this week's edition of Invest Africa. I'm Alicia Seckham. Well, the African continent has become a hub of activity with real estate investors entering the market, and despite the ongoing Eurozone crisis, African economies continue to grow. This week we take a closer look at the property market on the continent and unpack the challenges and opportunities potential investors may be faced with.
Africa is experiencing a population boom. By 2050, the continent will be home to 2 billion people from 1 billion in 2010. In the next 40 years, approximately 800 million Africans will either migrate or be born on the continent's urban nodes, leaving a need for people to occupy homes and have offices from which to work from. According to Buno Property Investment Group, there are 3 key markets on the continent. Each region represents exciting investment opportunities. For example, Ghana and Nigeria in the west offer high investment returns. Kenya in the east, which can be used as a base to expand elsewhere in the continent, and Zambia's attractive investment incentives in the south.
Thankfully, there are investors out there that are inclined to agree, and really that potential is derived from a huge demand-supply mismatch in certain subsectors of the real estate space that we've observed over the last few years.
With the African consumer becoming more sophisticated, there's been a growing trend towards the need for convenience. Consumers are looking for a one-stop shop, and there's now a clear evidence of the transition to formal from informal shopping centres.
The normal shopping trends of shopping in small plazas, this market, is now being overtaken by access to the shopping retailing centres. And obviously, yes, retail sectors or the retailers themselves are seeing a lot of potential in that. They are going out in great numbers into Africa, especially the South African companies.
Although investors are moving into this retail space, accessing funding for property development in parts of sub-Saharan Africa still remain a challenge. Developers often need to put down a 50% deposit to fund these projects.
In addition to developers facing the difficulty of having to put a larger proportion of the total project cost in as equity, which is inhibiting in itself, there's the added restriction of undeveloped debt markets in the types of jurisdictions that we're speaking about. That translates ultimately into a higher cost of debt, so debt spreads of between 750 and 950 basis points. And in addition to the higher cost of debt, or probably contributing to that higher cost of debt, is the fact that you've got a limited number of debt providers.
Once developers are able to move past the funding hurdle, among other regulatory red tape that may exist, huge successes may be achieved. For example, the Accra Mall in Ghana, which has an occupancy rate of almost 100% and has been a source for employment opportunities. At a time where the Western economies are faltering, the prognosis for Africa is still positive, which makes it the obvious choice for investors looking for higher yields. Timisha Mahanyele, Johannesburg.
Joining me in studio now to take a closer look at property investment and development on the continent is Louis Depper. He's Director for Real Estate at Actis, and Elvis Ndimurukundo, who's Africa Strategy at Jones Lang LaSalle, joins our conversation as well. Thanks so much, gentlemen, for joining us today. Perhaps let's start off with you, Louis. I've come across article upon article saying African real estate is becoming increasingly popular as an investment asset class as skylines grow in major cities. Now, that sounds pretty poetic. Just how much of an investment drawcard has African real estate become?
I think over the years, real estate in Africa has certainly received a far greater percentage of the attention over the last few years. What we've seen in raising our funds as well, we're well into our second fund. We've just closed that out at just under $280 million. And essentially the appetite that we've experienced from there indicates that there is a market beyond South Africa. There's a market in the States, there's a market in Europe that is actually feeding into the African and buying the African real estate story. Mm-hmm. And that gives us the firepower through the second fund to actually start deploying that capital base on real estate projects, and that is pretty widespread. We have a geography that's sub-Saharan Africa, so it's not only the quantum of cash you have, but it is also the spread of projects in the different jurisdictions that we look to that I think it attracts that investor base.
Alvis, Louis touching on things in terms of a geographic perspective and where that interest is being directed. When it comes down to the various components that make up the real estate sector, though, whether it be retail, office, hotels, business parks, are we seeing that interest across the board on that basis?
From my point of view, we definitely have seen a lot of interest, mainly in retail, as it's been pointed out. But we're also focusing on the office space, that where the demand is also rising and supply will eventually catch up with that. Of course, the primary focus has been retail, was driven, of course, for the consumer market growing also. But now we are seeing more and more services, industries focusing on servicing industries, the way we should look at an office space, also growth in that particular sector of the real estate, as well as warehousing.
Just how competitive a landscape are we looking at? Are we looking at a crowded market?
It's still crowded for the office space. The few developers that are available are still delivering, good stock in terms of office space, but the prime office space is still relatively short in supply, and I think that the best developers, whether being local or international, are looking at the growth on the continent. I think Louis can.
I think just
shed
to
more
add,
light on that.
Just to add, one of the areas we focus predominantly into two spaces, one being the commercial real estate and the other one being retail. And when you look at the retail, it is a sexier asset. It attracts more glitz and glamour. You have the brand names, the fashion statements, so it does have more allure to it than the office market. And I think for us, what attracts us to this environment is, simply put, the demand-supply imbalance is just ginormous. I think you could bring a whole bunch more players into the environment and you still wouldn't be able to meet the demands that are available in the market. So this is not a demand constrained environment, it's a supply constrained environment. And as we saw earlier in the video, the supply of capital, the supply of skills, resources, the difficulty and challenges of these markets have certainly added to make this a more attractive investment class from a yield perspective, but also it makes us focus a little bit more in terms of what we're doing. So we focus predominantly offices and retail, and then we could blend it with a little bit of mixed use in between, but essentially the core focus is those two sectors.
How do you weigh up the risk against the opportunity, and where does that risk scenario stand in contrast to perceptions about risk?
I think on the African continent, I've been personally traveling Africa since 1999. Have seen dramatic changes throughout Africa. Going into Dar es Salaam and seeing people begging on the side of the streets in 1999 to where they are today, where there's probably less beggars than there are in Sandton. I mean, it's a remarkable change. The GDP growths in these countries have led to phenomenal changes. So trying to balance the return profile and the perception of risk, I think the perception is completely flawed about Africa. There are hurdles. None of them are insurmountable, and I think it just takes a will and a passion to actually bring it about. And looking at the different opportunities and weighing up which is the right angle or which is the right area to invest into, I think a large focus is around where do you make your returns. Obviously that's a key driver, but essentially there's a shortage, so you could pretty much do anything in those markets and you would still make a decent return. Of
course, we've had Louis there touching on the perceptions about risk. Speaking to people who are delving into the real estate space out there, Alvis, what kind of sense do you get about what they're thinking about the risk scenario they're actually entering?
I think the risk factor is actually, if we could categorize it, in terms of commercial risk and political risk, and other risk associated with real estate. We're seeing less of the commercial risk in the retail sector, as Louis pointed out. When you've got retail, shopping centers being fully let, rather the onset when they're actually being developed, then you're addressing the commercial risk. And in the office space, you're still seeing a bit of a commercial risk where capacity levels are still slightly higher than the actual retail sector. Yet that also will still come down in future as the growth pattern of the rest of Africa picks up, with the GDP growth that we're seeing coming on stream. Political risk, of course, some of the investors, international investors, have had issues with the political risk associated with investing on the rest of the continent. But there's some, some progression in terms of democratic, inroad of some elections coming across. I mean, the likes of Ghana, where we've seen successive elections coming on stream and being dealt with. So I think that should definitely be addressed.
Louis, how do you mitigate against some of that risk by finding the right local partner, someone with the on-the-ground knowledge and experience, or do you go it alone?
I think different markets, you can take a different strategy depending on the market you're in. I think we've been very fortunate. We spend a lot of time in evaluating our partners and what we want to achieve out of it, what they want to achieve, and we align ourselves very clearly with the partners from the outset. So I think we've been very fortunate in the relationships we've set up in Ghana. We've had some fantastic successes, as you saw earlier, Accra Mall. We've done developments in Nigeria with very, very successful businessmen, and those have also been very successful relationships. I'm using the word success a lot, but in essence there is a huge value to be put on partnerships. In places like Dar es Salaam, we've actually bought out our partners who didn't want to participate in the actual second phase and expansion of whatever projects we were doing. So, there we went it alone, and it's a different strategy for a different market. And I think in West Africa, certainly it is more of a partnership environment because of the challenges you face in the local, the local legislator, etc. You need people on the ground, and that's one of the reasons why we've actually set up 2 development platforms, one in East Africa and one in West Africa, which is there to actually facilitate and allow us to deploy our capital faster, because primarily we're not developers, we are investors. So we put the money, we're the guys with the private equity that bring the equity to the transactions, and that's where we want to play. We don't play in the development space. We will back developers and fund developers. Yeah. So that's been a very successful area for us, and to sit with partners and making sure those partners are the right ones is a vital position to be in.
Of course, I know that I'm not going to be able to get you to share just how successful Actis has been when it comes to the investments it's made on the continent, but the fact that we've seen total commitments with the second real estate fund of $287 million being tabled, does demonstrate the kind of success you have enjoyed in the past. Perhaps that relationship with a local partner on the ground, Elvis, a particularly important one to develop and foster when it comes to navigating the regulatory environment in these various territories. I mean, the laws governing the ownership and taking of security of real estate in almost all African countries, I mean, they limit ownership of sale of land. Just how tricky does it make investing in this space, do you think?
From where we come from as Jones Lang LaSalle, we operate in the primarily in the office, servicing the office in market, in tenant representation, and in agency and brokering. We really progress by looking at a good partnership, a local partnership, where that they can help us in addressing some of the issues, as you pointed out, on the ground on behalf of our clients. Now, going forward, we're looking at more setting feet on the ground to address particular needs of our clients, global clients that are looking at investing on the continent or expanding their operation, requiring more premises on the ground. That comes again with the demand of a local knowledge or market intelligence that you can only actually get by aligning yourself with an actual practitioner on the ground. The days of flying in with a briefcase are numbered, and this is where we're seeing more of actual requirements from our international global clients to be on the ground and actually addressing the specific needs.
To what extent is it impacting the number of tenants we're seeing on the continent as opposed to owners? Because surely this having quite a bit of an impact.
Well, that was, I suppose, I mean, in the space we play, depending on what the client need, of course, one can actually rent or actually own the premises, but it depends, of course, on the case by case and country by case, and also the laws. Some countries might not allow an international company to own property, therefore requiring an actual local ownership or local investor to own the asset and then lease it to the international company coming into the market. I mean, that really depends on on country by country, where there's some restrictions. In Ethiopia, you know, it's quite restricted in terms of outside business parties coming to the country. So that's something that we still look at.
Well, let's leave the conversation there for now. At least we're heading into a quick commercial break, but more on Invest Africa when we return, so stay tuned. Welcome back. You're watching Invest Africa, and we're still looking at property development and investment on the continent. Gentlemen, let's jump straight back into this conversation, Louis, and perhaps pick up on what Alvis had touched on a little earlier. I mean, we were looking at ownership laws within various territories on the continent and how that could perhaps impede investment within this space of the economy. To what extent are we seeing a turning or an evolution of regulatory environments on the continent so that it is more supportive of this sector burgeoning more than it perhaps is right now?
Alicia, I think there's something that is fundamental to that. It's not only the policies of ownership, but it's also the taxation issues. So essentially, we've seen some dramatic changes in tax law, as well as financial exchange controls in the different jurisdictions. In jurisdictions like Zambia, there's been a significant move backwards, not forwards, where they've restricted the ability to trade and transact in US dollars, which basically has caused a whole bunch of property investors who look to have this hard currency dollar earning base to be stable. That is now in question. So there's a whole kind of pause in that environment. In other areas, the legislation and framework for development around ownership of land and the processing of title and amending of uses, etc., has been smoothed over and speeded up. So it certainly is working in some jurisdictions, but some jurisdictions not. In places like Kenya, we have a very, very good ground team. We have an office in Nairobi, and essentially they have a very close relationship with the local authorities, and they're able to meet, interact with them on a day-to-day basis, which I think, not many investors can say that they have that same kind of coverage. Yeah. And we have a similar thing in Lagos. We have a very close communication regime with the local authorities there, as well as the governors, so that we keep in touch with whatever developments they're thinking, whatever they're planning. We see and can adapt and assist with whatever implementation of policies that they're looking at. And it certainly plays into our favour for that. Of course, creative management is needed if we're going to meet Africa's real estate demand. Until African markets reach that critical mass, there needs to be diversity in terms of investment models, such as listed property investment vehicles specifically, which at this point continue to choke investment. What stride are we seeing in that regard? There has been some significant inroads into REIT legislation in most of the markets that we operate in, East Africa, Tanzania, as well as Nigeria. I think South Africa has recently had its REIT legislation approved, and it's going through the processes, and I think there's a few things there. I'm not that clued up with South Africa, because our focus is north of South Africa. But those strides and changes are coming to bear. And it's not only strides and changes in the legislation, but I think it's the strides and changes in the perceptions of the tenants in the local markets, that they are starting to see these changes, legislative environments that are enabling and bringing people into the foray. So the tenants are now looking to this and say, well, there seems to be a market, there is growth, there is an opportunity for the retailers to look at this and say, well, if REIT legislation is put in place, it is going to unlock more development, and you will see more developers coming into the market because it creates exit opportunities. So they will be looking to say, well, I can now deploy 5 or 6 different outlets. I don't have to look to one being the only investors. I mean, Actis has developed the first shopping centre, or first world-class shopping centre in Nigeria through the Palms. We've done the second one in Ikeja. We did the first one in Accra Mall. And those are all kind of groundbreaking, but there is a certain apprehension to the depth of that retail and tenant market. So to have the tenants looking at this in a slightly different light and being able to see more opportunity through the opening of legislation environments, I think is going to speak volumes. And I think it's not only the South African tenants, but the international tenants are looking in the same vein. Yeah. And the South African tenants, I think, based on the South African experience of seeing GDP at 2 to 2.5%, have to be seeing their market shrinking and the expansion or the opportunities for growth being very, very limited. What do you see this doing to appetite?
I mean, it's the reason, specifically looking at Kenya, if you would, that's where we're actually talking about. I think the Kenyan market in general the East African market. With this legislation coming on stream, it will provide us, for some of our clients, which could be in the finance industry or in FCMG sector, to focus more on their core operations and actually see opportunities to either dispose of certain non-core assets, that could be impeding their growth. Mm-hmm. And with such liquidity coming on stream, there's a capacity to actually sell it off to developers, local developers, and investors, and then we, ourselves positioning ourselves to actually advise furthermore on the quality assets that they should look at keeping and the ones they should be looking at disposing.
Of course, where we're talking about this appetite at this opportunity, there are a few countries that really stand on the radar screen. I mean, we've mentioned the likes of Zambia, Nigeria, Kenya as well. Are there territories that people are just staying away from because it flashes red on the radar screen?
It's a difficult question. Our focus has remained very consolidated around East and West Africa with the spin-off into the southern region. So in Ghana, Nigeria, predominantly in West Africa, Tanzania, Uganda and Kenya, mm-hmm. As East Africa, and then in southern is pretty much Zambia. I think Mozambique offers some exposure and expansion, especially on the retail front. I think the areas of growth, there are certain markets that you're seeing as we grade them basically into tier 1 and tier 2, and then there are certain countries that we don't really talk of, but we keep an eye on them. So we're watching them closely, we're seeing how they develop, but we find that the barriers to entry are just too high for us to look at. And I think places like Zimbabwe, where we have challenges around not so much the opportunity, I think there is a great opportunity for real estate, but I think it's around the extraction and being the ability to extract your capital out of the market. I think there's challenges there, so we tend to steer away from markets like that. Angola has always proved to be quite challenging for us. We've looked at a few schemes, but it's been pretty difficult, and more so than Kenya and Nigeria. And we believe firmly on focusing on the low-hanging fruit, get the deals that we know we can do. We've got exposure, we've been through those markets and we know them well, so there's no need to look further abroad.
To what extent does the same sentiment actually rub off on tenants?
On tenants, I mean, coming from, we should have to look at it from our end of, end of the table. As Jones Lang LaSalle, we are an advisory and brokering company, so most of our global clients, will actually enter markets irrespective, of some of these prevailing conditions. So
is it because they're tenants more so than putting their roots down actually on the ground?
Well, they're already operating. Some of them are already operating in these countries, and they're just looking at either expanding. Others are newly, new to the continent. Therefore, they might be more reticent in entering certain markets where they see trouble lurking in the horizon. But for those that are really existing on the ground, we cannot pick and choose where we would like to go when actual services are required. Mm-hmm. But don't have to mention some names of some countries we've seen political troubles, but there's no restriction as per se that we could say we can't invest in, as we are an advisory and brokering. So
I think one of the things that the tenants are also experiencing is that they're going through a bit of a mind shift from this light touch approach. So the likes of the True Words of Fashinis, the Mr. Price of the world, and Woolworths, they all used to go through a very light structure. So in other words, put a few feelers out into Africa and see if it works. I think their strategies are all evolving to the extent that they're taking a far riskier position, they're taking corporate exposure, and they're making a far more concerted effort to actually be present on the ground, and that is very refreshing in the environments. So they're taking the country seriously, and they're doing a lot more evaluation of the country rather than just leaving it up to their franchise partner to take all the risks.
Louis, I was going through some of the the projects you've been involved with on the continent as actors. I mean, Ghana's first green office building, One Airport Square, and East Africa's largest retail centre, Garden City in Nairobi. What boxes do investments need to tick in terms of criteria to warrant your capital commitment?
I don't think there is any exact formula, so I can't give you a checklist and say if you meet these 10 criteria, you've got the capital. But I do think there are fundamentals for us. We need to see deals that are scalable. I think deals that certainly show a development angle within the community. So we don't want to focus on expatriate residential housing, $1 million plus per unit. That doesn't speak to the market that we want to play in, so it must speak to the mid sector. So that's why retail, I think retail shopping centres speaks well, because it's focused on middle income earners, and with the rapid urbanisation of the kind of rural population to the city centres, it's the highest growth rates in Africa of urbanisation. So certainly that's where we focus and keep our energy on.
Well, thank you, gentlemen, for having joined us in studio today. Of course, that Louis Depper, who's Director for Real Estate at Actis, and Alvis Ndimurukondo, who's Africa Strategy at Jones Lang LaSalle. And that's where we leave it for this edition of Invest Africa. We'll be back again at the same time next week. From me, Alicia Seckham. Goodbye.